Union Multi-Asset Allocation Fund. Will investing in this NFO help you in your wealth creation journey? Let us find out in this in-depth analysis. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. Before analyzing this NFO, let us first understand a few basic details about the Union Multi-Asset Allocation Fund. So this is an NFO which opens on 20th August 2024 and closes on 3rd September 2024. And before analyzing even more further details about this NFO, let us first understand what is the Multi-Asset Allocation Fund. So a Multi-Asset Allocation Fund is a diversified mutual fund that can invest across variety or combination of asset classes. As per SEBI guidelines, the multi-asset allocation of funds needs to be invested in a minimum of 3 asset classes with at least a minimum investment of 10% in each class of asset. So as an investor can choose the proportion between 3 asset classes in any way they find suitable, but minimum criteria of 10% is required to be followed. So as investors, you have different options in asset classes which could be equity, debt, gold, digital assets, etc. So some of the key features of the Union Multi-Asset Allocation Fund NFO is, it is an open-ended fund type which has the benchmark index of Nifty 50 TRI, CRI, SIL, short-term bond index and domestic price of gold. So the minimum amount for application needed for this NFO is 1000 rupees. And there is no entry load, but there is an exit load of 1% if you redeem it within 15 days. And the fund managers for this NFO are Mr. Hardik Bora, Mr. Sanjay Bembalkar and Mr. Anidya Sarkar. So what is the investment objective of this fund? So it is to provide investors with opportunities for long-term growth in capital appreciation from a diversified portfolio of equity and equity-related instruments by various variety of combination of asset classes like that, investing across various combination of asset classes. What is the investment objective of this NFO? So it is to provide investors with long-term capital appreciation by investing in a diversified portfolio of equity and equity-related instruments, debt and money market instruments, units of gold, exchange-traded funds like ETFs or silver ETFs, and units of REITs and INVITs as per the asset allocation pattern of this scheme. So the aim is to invest across a variety or combination of different asset classes and to generate long-term capital appreciation by investing in these securities. So what is the investment strategy this NFO aims to implement? So it aims to provide us with diversified allocation across various combination of asset classes to minimize the volatility due to exposure to these asset classes. So we can get better stable returns in the long run. So this is the investment objective and the investment strategy of this fund. So as we have understood the basic details about the Union Multi-Asset Allocation Fund, let us now analyze whether we should invest in this or not by analyzing the potential merits and demerits present under this NFO. So first of all, there is the benefit of equity taxation, which is your long-term capital gains up to 1 lakh per year or exempted, and if the multi-asset allocation fund equity based, then any gain above 1 lakh will be taxed at 10% without the indexation benefit. So these are some kind of taxation benefits. It also has a debt-based benefit, which is if your long-term capital gain over which is debt-based is gone over above 1 lakh, it will be taxed at 20% with indexation benefit if it is held for a period longer than 3 years. So there are taxation benefits for this NFO, and also as it invests in a variety of asset classes, it can align with your long-term goals as it has the privilege of investment across different asset classes. So it has the potential of maintaining a diversified portfolio, which means less exposure to risk, meaning less investment risk. So there is a more potential for capital appreciation in the long run. Now let's take a look at the potential demerits. Sometimes over diversification might occur which dilutes your overall returns. So the fund management style for this fund is unknown as it's an NFO and it has no track record. We are yet to see how it will perform in the market. So we cannot properly analyze the performance of this NFO and take a calculated risk. So if we choose to invest in this NFO, it's because we are taking a blind risk instead of a calculated risk, which is even more riskier. So also as an NFO, we do not have the clear idea about the stocks or the asset classes to be selected under this NFO. So it's even more risky since we cannot analyze the security securities present inside the portfolio. We need to consider all these factors thoroughly to better understand what are the potential risks that is present in this NFO. So what is the final takeaway from our analysis? Should we invest in the Union Multi-Asset Allocation Fund? Is it worth investing? As we can see, this is totally up to you. As an investor, this is totally up to you what kind of investment you want to make. If this is worth investing or not is based upon what kind of investor you are, like what kind of asset allocation you want to give to your funds or your portfolio, or what is the risk tolerance you have, and what is the time horizon you have kept to achieve your financial goals. So it all boils down to the factors what kind of investor you are. So our personal opinion is, instead of investing in an NFO like this, it's better if you choose to invest in an existing mutual fund that has a track record for at least a minimum of 7 to 10 years. Why a minimum of 7 to 10 years is because equity is generally recommended for investment in long term horizon, because in 7 to 10 years the market cycle would also get completed and you will also get better potential returns and stable returns because of that. Because in a short term period, market is highly unpredictable. So as the track record for the mutual fund is more than 7 to 10 years, you will know how the market cycle has performed because it has completed the market cycle. So it's better to invest in an existing mutual fund that has a track record for a minimum of 7 to 10 years to take a calculated risk by analyzing the proper performance of that fund. Because without proper portfolio and research, if you choose to invest in an NFO like this, it is highly risky. But if you still want to invest in Union Multi-Asset Allocation Fund just to see how it will perform in the market, then you can definitely invest it through a minimum investment, like on a trial basis. If you have surplus money, then you can invest it through your satellite portfolio instead of your main investment portfolio, and invest starting from a minimum amount on a trial basis or an experimental basis. So this is something you can do. But if you're still struggling making a decision, or you do not have the sufficient time or the knowledge to research whether this will be fit for you or not, or what kind of fund allocation will be fit for your investment portfolio or not, then you can definitely consult with a professional financial planner to help you properly guide through your investment journey for a more better financial future.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.